how to find trades using screeners. So let me pull up barchart.com and I'm going to show you all one of my favorite screeners. Okay. Now, when you come over to the menu, you'll be able to see a screener for each one of these sections. Okay. So you can do ETFs and we'll go over all of these in just a second. All right. We'll start with the stock screener. One of my favorite stock screeners is the S&P 500 oversold stock screeners. This is a custom screener that I've created. It helps me find opportunities that are in the S&P 500. I add this index group, select S&P 500. If you prefer the NASDAQ or the Russell or any sort of sectors, you can also filter them by that. But for this example, I'm using the S&P 500. Now, the goal for this is I usually recommend this to beginners because the goal of looking at the S&P 500 is that most funds are tracking this index, meaning that the stocks in this index are going to be purchased on a monthly basis from these funds that track the index. And for beginners, I usually recommend selecting large and mega cap companies. That way you see companies that are already big, substantial, and already have a name for themselves. So you're not trying to exactly bet on a micro or small cap that's still in growth. Now, there will be more growth opportunity, but with that risk, or there will be more risk, but with that risk comes opportunity. So if you want to look into this one, you can always open that up. But for the sake of narrowing down this list, we'll go ahead and just look at mega cap companies. So some of the biggest companies in the S&P 500 in the world for that matter. Next, the RSI. Now it's a 14-day relative strength RXI, and so I'm having this less than 45. Now, most cases, RSI oversold technically is at 30. But in the case that I'm trying to catch a stock that's falling into that range and not necessarily there, because you may have stocks like Apple or Amazon or even Tesla in some cases that may not necessarily reach the extremes of 30. But by setting this at 45, I'm exactly finding stocks that are below the mid range, meaning that they are falling into oversold or reversing back from oversold territory. So you can set this at, whatever you like, but the lower this number is, the more finite the results are. So in this case, I'm trying to find stocks where I can either catch it falling and be ahead of this, or I can catch it rebounding and be sort of on the trend of it reversing back. Okay. Volume, I put 1 million in here just to set a minimum, but in most cases, mega caps are going to be trading over on average 1 million shares. And a couple other filters here I've added that haven't set any criteria. Adding filters here also sets them as a column. So by adding these filters, like these signals for the trends for short-term, overall, long-term, mid-term, as well as the moving averages. So essentially, I just want to see how is the trend when it comes to the signals, as well as the placement in comparison to the moving averages. So when I click see results, you can see that I've narrowed down the S&P 500 down to 13 stocks. These are stocks that are essentially trading lower and closer to oversold. Now you can sort this. I automatically sort it in terms of volume. This lets me know what are the most active stocks on this list. But if you're looking at market cap, you can also set it to this to see what are the biggest names that are trading lower. Now, a couple of ways that you can visualize this as well. You can set your own custom views here, but one of the custom views is also the mini chart view. And this will kind of give you a quick view of some of the charts. So if I change this to maybe like a 1 month, you can see how these prices have fallen. Now, going back to the main view I have here, which is my filter view, actually. We'll set it by market cap, and then we can also go to flip charts here. When I pull up flip charts, this allows me to essentially set up any type of themes that I have or templates that I have for my charts. So when I open up the templates here, I can either select pre-made ones from bar chart, or I can select one of my custom ones where I have the put call open interest ratio here. Now, just to see a couple of more of these charts at the same time, we can do the grid charts, and we can also change the templates. as well. So depending on how you want to look at these charts, you can change your template. So in this case, I will do my put call open interest ratio. So we got Microsoft here, Amazon, Walmart, and Meta as well. And we can see that all of their put call open interest ratios are moving lower as price moves lower. And Amazon looks like it spiked up for a bit to kind of catch this trend moving lower. But for the most part, we have low put call ratios over the board here on these. Now, if I want to dive deeper, this is just doing the chart analysis, and you can scan these as well. But let's say I'm looking at this list here. I've sorted it either by volume, relative strength, or market cap. You decide to pick a stock. You've gone through the analysis. You say, hey, I want to take a look at Microsoft. You can open up Microsoft here. And this is just how I kind of walk through a trade. First, if I'm trading options, I want to go over to the options dashboard. This is essentially going to tell me how I need to be positioned in this trade if this is something that I'm interested in. Now, the volatility is going to tell me, am I paying too much for premiums or am I paying less, right? If the volatility is high, that means you're paying more for premiums, which is better for option sellers. Now, option buyers, on the other hand, prefer low or say volatility is average or rising, because that means that I'm paying a lower price, but that volatility increase could increase the premiums. And that's what buyers are looking for, an increase in premiums. So you want to pay attention to the volatility because that will tell you if you're paying too much or actually getting a deal. And if you're a seller, if the volatility is high, then this is an opportunity where you can collect higher premiums. Okay. Now the trend here is going to be based on moving averages. So we've got a short-term, mid-term, and a long-term moving average. So this is going to tell us a lot of the technicals. And if the price is red here, that means that these prices are below these moving averages. Now, these arrows will turn to show you that the degree or the slope of the trend is changing. So you want to pay attention to these because let's say we get a recovery from the short term, then that could tell us that there could be a reversal setting up, or at least the momentum for this downside is beginning to change. So we want to pay attention to that. Next, we've got the expected move. Now, the expected move is great when you're looking at option strategies and you're trying to figure out what strike prices to select, and those being actually realistic strike prices. And these are based on options positions. So they're going to be broken down in expiration. And then we also note earnings on here. So you can actually expect what range to price when you're trying to trade earnings. Now, if you're trading the stock, this also gives you realistic sort of range to set price targets as well as stop losses. So instead of just coming up with numbers or accepting a number that you've heard online, you can always come in here and see the data, and it comes up with realistic ranges based on these expirations, and you'll get the expected range and the implied volatility. So pay attention to that. And one of my favorites here is the put call ratio. Now, the put call ratio is going to show options positioning. The volume, that's going to change daily because that's going to tell you what's being traded and where is that volume. Is it more puts? Is it more calls? Because the put call ratio is puts divided by calls. So the higher this number is, the more puts there are. So when looking at open interest, we can see here that as price was higher and touching these highs, right, we had essentially a double top. People are extremely bearish. And as price began to fall, you can see those puts essentially began to take profits because the put call ratio began to fall. So you can see here as price began to climb back, puts started to come back, but as price is moving lower, we can see the put call ratio is lowering as well, meaning that more people are positioning towards calls versus puts. Okay. Now that doesn't always mean it's a bullish signal. But it does tell you how the market is positioned, because sometimes an extreme in this case could doesn't necessarily, this open interest doesn't dictate the price direction, but it tells you how the market is positioned. Okay. And so if you want to dive deeper, looking at this to find out where are these positioned, you can look here at the expiration dates, and it tells you a little bit about the put call volume and the open interest. Now, if you want to dive deeper, there is the put call ratio page. And this is a great place to start when looking for, like if you're trading options and you found this stock. first, the put call ratio is going to tell you how is the market position when it comes to the open interest. So we can see here as price falls lower, so is the open interest ratio. But where are these people positioned as far as expirations? We can look here. When you add the volume graph, it makes it a little more visual. Without the volume graph, you can obviously see where the larger numbers are. But with the volume graph, it makes it a little more visual where we can see where is this positioning. So when it comes to the open interest, we can see that there's a lot of open interest at the 7/17 expiration, as well as the 12/18 and the January 15th. Okay. So where if you want to decide then which expiration date to pick, you're obviously trying to find where is the most open interest so that you can find out where's the crowd. Now, let's say you want to trade a shorter expiration. Today is June 22nd. Let's say you go for the 8/21. But we're just using this as an example. Let's say you pick the August expiration as your trade. Or actually, let's do the 7/17. We'll do the 7/17 based on the open interest. When we come here, just so I can make this a little more visual, we'll go side by side, and then I'll also do the volume graph. We'll do 20 stripes so we can see where is the pricing. So price is here, the current price is here, and you can now see where is the open interest position. Okay, so here we've got puts. And on this side, we've got calls. Okay, so you can see there's a lot of open interest at the 420 and the 400 strike, as well as right at 380. And then when it comes to the puts, you can see that 350, 370 seem to be the largest, even some 380, quite a bit here. So this will essentially tell us where those contracts are positioned in open interest, okay? And you can also look at the volume. And if you want to understand where does volume turn into open interest, you can also look at the change in open interest here. Because a lot of times while the open interest is going to tell us how they're positioned, the volume can tell us whether that is changing. Is it going up? Is it going down? Because the volume, it changes every day. It resets. It's just telling us where the traffic is today. But if we want to see where that volume turns into open interest, you would want to go over here to the menu of options and click on change in open interest. And this is a great place to find trades for option traders. Okay, so I would start here on change in open interest to understand where are there increases in positions as well as decreases, right? You can find a lot of opportunities throughout this, okay? So this is one place to start. So I'll give you a couple of places. Let me, on the topic of this, let's go over a couple of places where option traders can find trades, okay? Now, when you come over to the options menu, you've got screeners and you've got a lot of these lists here, okay? Now, one of the most popular, I'd say, is the most active options list. This is going to tell me where all the options volume is today, okay? So we can see some names that you're all familiar with: NVIDIA, Tesla, SpaceX, okay? It's going to then break that volume down in puts versus calls. So what is the market trading when it comes to this particular volume? So we can see the majority of the volume for NVIDIA is in calls, okay? Now, you still want to then select this stock, and we go into the options dashboard. We check the put call ratio, expected move, and the trend and everything after that, okay? Now, if you're looking for unusual options activity, that's also here on the menu under unusual options activity. Now, this is going to basically show us where there wasn't a lot of open interest, but there was an outstanding number of volume. And what that could mean is there could be new positions starting to set up, essentially. So this is telling us that there's an outnumbered amount of volume versus open interest. So if the open interest is low, that means that the day didn't start with a lot of positions in this particular contract. But as the day progressed, there was a lot of volume in there. And so what you want to, if you want to follow one of these trades, what you want to look for is, excuse me, what you want to look for is, did this volume turn into open interest? And in that case, we would see that there's a new position being built in these. So this is a great place to start and look for trades. And as always, we want to click there and go over to the options dashboard to dive deeper into what does the volatility look like and the trend, expected move, and also the book call ratio. Okay. Another thing I would look at is if you're somebody that likes to track, let's say you're an option seller and you're looking for high volatility because you're looking for contracts where you can sell in order to collect premiums based on this higher volatility. Then I would check highest implied volatility. Now, if you're looking for the lowest, this is for people that prefer to buy these contracts, and they're looking for low volatility, which means lower premiums. Okay, so if you're looking to sell options, you want to look for high implied volatility. If you want to be an option buyer, say long calls, long puts, this is where you would look to make sure that you're getting a lower price versus paying higher in premiums because of increased volatility. Okay. Another place that I would look is change in open interest. Remember when we talked about that unusual activity having large volume in compared to open interest? Well, change in open interest is going to tell us where did those increases and decreases happen? Where did that volume change the open interest? So in this case, you can see here, these are where the increase in open interest has happened. And in this case, there could be still small volume here because like I said, the volume changes day by day. But what we're looking here is the change in the open interest, the increase in positions in these particular contracts, right? And then also decreases. So if you're looking at where are people letting go of these positions, you can look here. Okay. And these are great places for option traders to start. And if you're also trading options, I highly suggest using our option screener. When you come here to the option screener, you also have several different screeners you can use here. If you go over to the options menu, there's plenty of screeners here. Okay. If you're doing, say, the normal long call, long put, you're buying options here. There's also income strategies when you're doing the wheel, where you're selling covered calls and also selling naked puts. And that would be the wheel strategy, and also spreads. Maybe you're doing a bull call spread, which is called the poor man's covered call. Okay. So there's different strategies here where you can look up trades that fit your strategy. Now, if you want to learn about these different strategies, head over to the Options Learning Center. This is a great place to start. It starts with the basic strategies like your long calls, your long puts. Basically, you want premiums to increase from low volatility. So you can click on these. It'll basically give you an entire lesson with a video, gives you a strategy over glance of it as well. And this just helps you understand each one of these strategies with an example and everything. So when we go back to the Options Learning Center, you can do that for all of these strategies, whether you learn about spreads, converse, straddles, strangles, they're all here. I think what's cool about it, let's say you want to understand what is a short straddle option strategy, okay? So first, you can click on Learn More. It tells you that, hey, this is based on neutral, unlimited loss, limited profit, okay? Now, if we go back, and let's say we click on the screener. When we go to the screener, our profit and loss charts will actually give us the trade. So let's say we come over to our short straddle screener, okay? When you see this chart icon here, you can open this up and this will show you the trade. So you will visually understand what this trade means, okay? So you're going to sell a 195 call and you're also going to sell a 195 put. Okay. And so it's showing you essentially where this price would need to stay at expiration in order for you to profit. And it'll show you the profit and the price and everything. So, and I think what's beautiful is it shows you essentially how the trade is set up, right? With the trade set up here, but visually what that means. When you're setting up a short straddle, you essentially have a price in which or a range that you're creating around a particular price in which price needs to stay. So you're saying that price will stay at this price, strike price, by expiration. And if not, you will lose. But so long as price stays right at this strike price, then, or in this range of the strike price, then you will profit on this trade. And we can do the same when we're looking at any other screeners. Like let's say we go to covered call, right? So this is essentially saying you own 100 shares of a stock and you want to sell calls above your strike price, right? So if we pick a stock here, let's say we'll just pick this one, for example. It's essentially telling us to trade here. We own 100 shares of the stock at 57.41 and we sell a call at the 70 strike price. And so that strike price or the credit is we're receiving that premium of 465 from this trade, and the cost of that is owning 100 shares of this minus the credit we received. But we would only have to buy these shares, or actually in this case, this is selling it. So that's what you receive when you're selling it. So in the case of this covered call, you would be buying the stock at 57 or owning 100 shares, and you would sell a 70 strike call, essentially collecting that 465 premium. So you would credit that 465. Now, so long as price stays below 70, you profit on this trade, okay? And you collect the premium. Now, if the strike hits 70 on your by expiration, you sell your shares at 70 and you collect $5,276, and that would be the equivalent of selling those 100 shares at 70 minus the debt or the credit you received from the premium. Okay. So actually, no. Actually, yeah. The debit is actually the cost of you buying these shares minus the credit received. Yeah, I said that wrong. My bad. I'm thinking about selling puts. So in this case, for this covered call, you would be buying 100 shares at 57.41, or you would already own them and you would collect the credit premium from that 465 of selling that 70 call option. Okay. So the cost of this trade is buying those shares, but you collect the premium. And so long as the price stays below 70, you collect the premium and you also keep your shares. If price goes above 70, you sell your shares, you still keep the premium. Stock goes on without you. Okay, so this helps you visually understand the trade that you're looking at, okay, with the profit and loss charts. And these are all on the screeners here. And like I said, you can always go to the Options Learning Center in case you need to understand more of these. And whenever you do, you can always watch them on YouTube to get the full breakdown, okay? So anytime you want to learn more about these strategies, just click to learn more. You've got the strategy at a glance and you've got a video to help you. Okay. Now let's move on here. Let's say you're into ETFs. I know when a lot of people start trading and investing, they're always asking, where do I start? I think a great way to start, a lot of people, when you're starting and people say, where do I start? Most people recommend an index fund. Now, most of you are familiar with the SPY. And if you scroll down on the SPY, you'll see also related ETFs and related instruments. Okay. Now, these are ways that you can sort of trade this particular ETF with leverage. Okay. Whether it be negative short or positive, like triple leverage or double or anything like that. But in the case of also, let's say you want to look at VLO, right, which is another ETF. So anytime you've heard about an ETF, somebody recommends an ETF, one of the great things here, we can see the top 10 holdings. So when people say, well, where do I start investing? Well, the top 10 holdings is always a great place to at least look or start. It's always best that beginners focus on just investing in ETFs, especially ones that track the index, because in most cases, they usually outperform. Especially in recent years, they've done quite well. But if you want to be a stock picker, I suggest always going into these ETFs and trying to focus more on the top 10. Okay. And in this case, you can see where the constituents are here in the VOO Vanguard. So you can see these are a lot of names that you're familiar with. You can also save this as a watch list. Okay. So let's do that. We'll say VOO Holdings. Maybe I already created this one. Yeah, I already did. Ha, gotcha. So I've already actually have this saved as a watch list. Okay. And this is a great way. And let's say you're looking at Tesla. So let's say you want to take a look at Tesla and you want to trade Tesla. You can also do the same thing for Tesla, related ETFs, and these will be the managed assets. And when you go into percentage, this shows which ones hold the highest percentage. So if we click see more under here, we'll actually see a list that sorts these based on holdings. Okay. Now, so if you're looking, let's say you want to invest in Tesla or maybe the EV sector, you can essentially come here, or whether it's autonomous tech and robotics or different types of ETFs hold this for different sorts of strategies and sectors or industries. So based on what it is that you're looking for, you can come in here and actually find that based on the percentage of holdings. So if you'd rather it be on holdings, or maybe it could be on the volume, or it could be under assets management, under management, which funds hold the most assets, but also hold some Tesla, right? And you can see that VOO is at the top of this list. So that there's no question as to why it's a popular ETF that tracks the index. It's also one of the largest, okay? And so this is a great way to sort of find that. Now, another way that you can look for these types of opportunities is the ETF screener. Okay, so when we go into the ETF screener, I'm going to show you a little trick here that'll help you find those same types of trades, but for just about anything. One of the filters you want to add is name. Okay, we're going to add name, and then we'll add assets under management. Maybe we can do leverage, see if it, or we'll do the fund family. Leverage will be on there already here. And then let's do volume. Let's do volume, and those will be our filters for now. That's a good setup for now. Okay. So what I want to do is I want to find stocks that are trading Tesla, or ETFs that are tracking Tesla. Type in Tesla in the name, boom. You'll have your ETFs here. You'll see the leverage as well here. So whether you want short, double long, you can see those here. Whether you want to track them or sort them in order of volume, you can do that as well. So you can see the 2x Bull ETF is one of the largest in volume, as well as assets under management. Okay, so you can essentially find these leveraged ETFs, or even sort of these ETFs that track these particular assets in case you want exposure when it comes to leverage. And another example here, let's say just based on some of the most popular, let's do SpaceX. So if you're wanting to trade SpaceX new IPO, biggest one in history, you want to trade it, boom, type in SpaceX, here's your ETFs that you can trade, okay? And what's cool here, you can also add leverage fund family in case you want to see like who actually sets these up. Okay. So this is a great way to find trades related to particular stocks, names, anything like that. So if you're saying, hey, maybe I don't want to trade options, but I want a little more leverage without having to fight time decay, but these are daily exposures, so that changes daily. One bad day could give you an even worse one. Okay, so trade these with caution. But this is a great way to find trades that give you leveraged exposure without having to trade options. Because in some cases, options can be pretty expensive, especially in the case when there's high volatility. That means increased premiums. So if you're looking for a way to trade these, you can always pull them up here. And let's say if we sort these by volume, we go for flip charts. You can kind of see these aren't going to have a lot of time here. So we'll say 4 days. So when we do the grid charts here, boom, you can now see them. And like I said, you can always change the templates. Let's say you want to put, one of bar charts templates. Let's do RSI with moving averages. Actually, It's not a lot of let's do the squeeze. It's not a lot of info on them because they're new. So we'll do MACD and RSI, and then we'll change this to 1 month, 1 hour, boom. And so now we can come in here and kind of scan different charts. And there's not a lot of data on these, so it's not like we're going to see a lot of technical analysis here. But this is just a great way to find these things. Let's try Tesla again. See, let's type in Tesla, then we'll put this in volume, and now let's look at these because this has a lot more data. So if we go here, we can look at more charts. Let's say 2 by 2, and then we'll add our template here. Let's go with a bar chart template, MACD and RSI, boom. So now we can kind of sit here and analyze these charts. You can sit here and add whatever, Fibonacci retracements, trend lines, anything like that. But it's interesting, you can essentially see how they're moving the same unless it's a short. Okay. So yeah, this is a great way to find trades, find opportunities, getting exposure outside of options using ETFs. Now, another way to find ETFs that fit your strategy or an industry or a particular asset you're trying to trade is the ETF finder. Okay. So in this case, you can do it by commodities, currency, different strategies like fixed incomes, alternative assets, and everything like that. In this case, let's say we're looking for semiconductor ETFs, right? We want to go for sector and we want to go for information technology and semiconductors. Boom. Here's your ETFs for semiconductors. That easy, right? Let's say we want to look up, hey, everybody, when they first tell you, if you're a beginner, you're new to the market and you say, hey, where do I start? People say, start with index funds. Well, what does that mean? Right? Well, index funds, which ones do you want to track? Right? If you want to track the S&P 500, here's your index funds that do that. You can sort them by assets under management. You can also sort them by volume. Right? So you can, there's plenty of, we can even add, when we go into the screener and everything, you can start to essentially filter by dividends. But if you want to do that, come over to fundamentals and here's your dividends. Okay. So I know right now real estate is a big thing. So let's say we want to go for something covered in real estate. Well, you can literally pull up REITs right here. And this will allow you to essentially invest in real estate without actually owning the property. Okay. Now, a lot of these, let's go back to the main view. You can sort this by assets under management to see which one is the biggest. Okay. Or you can say, where is the most volume? Okay. Now, once you find an ETF here, let's say you're using this as a way to find stocks in a particular sector or where to invest in that sector, because we already know these funds are going to be purchasing whatever stocks are here. So whether we find an ETF by volume or assets under management, let's say we go by assets under management, we click on JP Morgan's International Research Advanced Equities. Let's see if we can, yeah, we'll click on this. So we can then come into the top holdings and see where that money is allocated. Okay. So we can see, okay, they've got some, this is a bit spread out. Let's find one that's a little more focused on real estate. So REIT, here we go. Let's go by volume. Let's see. Okay, real estate ETF. Here we go. So sorting this by volume, we can see that the Dimensionals Global Real Estate ETF is the highest in volume on a 20-day average. So now we go into the holdings. We see the top 10 holdings. Obviously, these are real estate stocks, right? Digital Realty Trust, Real Estate Income, Public Storage. These are all stocks that essentially give you exposure to real estate, whether you're collecting income from rent or from storage, right? A lot of great, or building, right? So there's a lot of opportunities from property management to construction to development to financing, all here in this particular ETF. So then we can dive deeper. Let's say we like Digital Realty Trust. right? We can then see what other ETFs hold this one, right? There's even a Vanguard ETF for real estate. And then we can see the percentage of this holding. So when we open up the related ETFs to Digital Realty Trust, this stock that we found from the ETF finder giving us a real estate ETF, we can dive deeper into more ETFs that hold this particular stock. So let's say we didn't know the ETF at first, but we knew the stock, right? Then we can come here and look at what is holding this, okay? And then you can sort it by holdings. We can do the same thing here, whether it's volume, leverage, or assets under management. Okay, so these are just ways that you can get exposure through ETFs. So if you're wanting to invest in a particular industry, you can find the ETF, or maybe you want exposure through a stock and you want to trade with a leverage ETF, or just want to invest without having direct exposure to one stock. This is a great way in order to do that using the tools in the ETF finder as well as the screener. Okay. Hopefully that covers quite a bit on finding trades. I feel like I covered quite a bit. Let me give you a couple more examples. Like, let's say, here's an example. Let's say we are interested in trading some precious metals. Okay, so we'll go under commodity, metals. You can do precious metals, or you can select gold, silver, one in particular. We'll say precious metals. This gives you the bundles of gold and silver. But let's say we wanted to trade something specifically to silver. You can do the same thing here. And let's say I decided to pick this one just based off of assets under management, and it seems like it had a high volume. So I want to trade silver. I click on this ETF. There's also a leveraged ETF that tracks this as well. So we can see that under the related ETFs, as well as any related instruments when it comes to futures or additional indexes that track this particular asset. Now, I always like to check the news as well to find out what news is trading around these particular assets. But since this isn't necessarily a stock and you can't exactly check, say, like insider trading or anything like that, I do like to check the put call ratio for these ETFs because the options market will essentially tell us how traders are positioned. So when we check the put call ratio here, you can see that the open interest is lowering, meaning that even as price stands still, it seems like people seem to still be stacking up into calls. Okay. And then if we come here, if you want to find out what's the expiration date and all of that, you can always dig deeper on the volume graphs down here to find out where is that positioning on expiration. And then once you drop into the expiration, you can then look for your strike prices. Okay. So another place to start, let's say you want to, let's say you like this trade, but you're really trying to understand where are the limits to price. A place that I check after the put call ratio is always gamma exposure. Gamma exposure is essentially going to tell me kind of what I saw on the put call open interest ratio, but essentially how hedge funds and the options market is positioned. So we can see these large positive spikes. So if we add the put call and the put wall and the call wall, these will set the boundaries. So we can see here price has fallen below our put wall and in negative gamma, meaning that price will accelerate lower if it cannot stabilize itself at these particular levels of gamma here, because there's quite a bit of negative gamma here. So in order for this silver ETF to really recover its strength and show signs of a reversal, we essentially need to recover the gamma flip. So if price is trading at 59.51 and the put wall is at 60, we first need to overcome 60 and then reclaim the gamma flip. If we can see a continuous rejection at 60 as well as 61, then we know that there's not going to be a recovery for silver until we recover these prices. But remember, these large spikes of gamma, positive gamma, are going to act as like a magnet trying to pull price back to these levels. So we can see here at 65.50, we've got a large positive gamma spike. So price will try to push its way back there, but also market makers essentially will stabilize price as it gets to that. So you'll see a little bit of resistance here, but once price recovers the 65, that should act as a support and essentially be quite a large positive gamma floor to see things push towards this call wall. And another place where we'll probably see some resistance. But as I said, as it continues to reclaim this positive gamma, then we can sort of see price stabilize and continue pushing higher. But as long as we're in negative gamma and price continues to fall below these gamma spikes, those essentially accelerate price moving lower. So we want to watch these levels here. It looks like the next large gamma spike is at 58. So we'll need to hold 58 on the SLV in order for price to truly stabilize. If price won't hold 58 and we can close below that, you can see it continuously move lower. And until we reclaim this put wall and the gamma flip, there really won't be any sort of positive catalyst from a technical point of view when it comes to looking at the silver ETF. But you can see here, if we want to understand where are the options market position, we can see that they're obviously buying more calls based on the open interest ratio. They're buying more calls. Where are those calls? We look here, we can see September, lots of July as well. So they're trading within that crunch of time decay here. So let's actually, we can see where this is positioned on the gamma exposure. But if you're particularly looking for a trade in the options market, then you would essentially go this route as well in trying to figure out what is the expiration date with the largest open interest, as well as which strike price. So we can open this up and kind of understand where is the market position. So we can see a lot of open interest in the calls at the 65.50, which we saw on the gamma exposure. And then also on the put side, we can see here that we're heavy at this 60, which is our put wall. Okay. So if price can't reclaim this level, we could potentially start to push lower. Okay. So pay attention to these. And then if you're interested in this, always check the options dashboard. This isn't a trade recommendation, but you always want to come to the options dashboard when trading options. Okay. You want to check the volatility to make sure you're not overpaying for premiums. If you're an option seller, you want this to be high. If you're an option buyer, you want this to be lower. Check the trend. Make sure the trend is in your favor. The trend is your friend. So we want to see some signs of recovery. We want to see this short term be turned from, being bearish to potentially turning over. Okay, so we can spot that this bearish trend is actually showing signs of weakness, and we can see some strength come back from a bullish perspective. But you'll want to see that in the change of price. Put call ratio, as always, is going to show us how is the market positioned. Okay. And then the expected move is going to tell us realistic expectations based on option positioning and these expirations. So instead of us saying that, oh, silver's going to go back to 100 by September, well, we can see that realistically that isn't a target based on options market. The option market isn't even pricing in that sort of target. So anybody saying that would essentially be unrealistic. So you want to be realistic. And in that case, when you're looking as a way to find your targets or a range in which to set up option strategies, or even to make a trade when you're just trading shares, you still want to have a realistic range, and expected move will help you get that. Okay. That's how I run down the trade. That's essentially it. I'm trying to think of what else I could show you. Yeah, I think I covered it all. I went through one of my favorite screeners. I will say this. I'll go through this. So if you're new to bar chart or experienced with bar chart and you're looking for trades, always start with the investing tab. Okay, this has got plenty of different ideas, screeners, and setups for you all to find trades without sitting here trying to dig for hours, building your own screeners. We can do that for you. So whether you're looking at insider trading activity, we can come here and see what are insiders doing. They may sell for a lot of reasons, but there's only one reason why they buy. Okay. So in many cases, I'm looking for buys. Selling can show signs of weakness, but in many cases, we don't know why they're selling. They could need the money. They could think the stock's going to go down. We don't know. There's a million reasons to sell, but there's only one reason you buy. So in many cases, you can always sort these by buy. You can also include politicians. And so we can see, well, what are politicians buying? Okay, so we can see some of the largest purchases, or we can sort these by the actual date. Okay, so this is a great place to find where are the insiders buying. Okay, and then another place I like to look, this was new. I like RSI bearish divergence and bullish divergence. This essentially allows us to see where price isn't necessarily matching the momentum. Okay. Now, in a bullish divergence, this means that the RSI is showing momentum under the surface, but price might not be reflecting that. Okay. And if you want, you can always pull up the flip charts, and then you can come over to this template and bar charts and add the MACD RSI, and you'll be able to kind of see what, let's see, we'll scan this list. But I'll click on this one just randomly. But this will allow you to see, you can see here this divergence, right? The RSI is rising, but price is still trading sideways, meaning the momentum is building under the surface, okay? Another one is the RSI bearish divergence. This means that price is moving higher, but momentum is weakening under the surface, okay? So let's say we set these in order of, let's do it in terms of volume. I want to see some of the biggest names. And then we'll put in flip charts. And if we add our template here, the MACD and RSI, you can see where RSI was higher here and price made a higher high, but the RSI didn't. Okay. That is an RSI bearish divergence, right? So while price is moving higher, RSI is not. Okay. So that is where you see weakness under the surface. And the same thing for a lot of these stocks, right? It's like this essentially came just close to hitting the same level, but we can obviously see that RSI is moving much lower, right? It's not even close to hitting the same levels, okay? So that's where you see that weakness in momentum. And then the MACD is there for us to confirm when these crossovers happen, okay? So these are great ways to find tools, especially when you're trying to find that sort of like underlying play. I love these. These are new RSI bullish diversions. If you're looking for like candlestick patterns, if you're somebody that's really, you look for those candle setups, this is a great way. All of these will essentially show you different stocks and ETFs using these particular bearish and bullish trade setups, okay? Based on candlestick patterns, all right? What's another one I like? Bar chart screeners. Well, this is top trending tickers. The top trending tickers is a great place to start as well if you want to see where are bar chart users charting. Okay, so this is essentially telling you over the last 12 hours where have most people been spending their time on the charts. So this is a great place to see what people are actually charting. This is a really like hidden gem on the website, but a great place to see what our traders trading before the data hits when it comes to volume and the market opening and everything like that. Okay. This is a great place. Another great place, bar chart screeners. Whether you're looking for stocks or you're looking for options or you're looking for ETFs, there's a screener for you. So this is sort of pre-made screeners that will help you find stocks based on these particular strategies. Okay. Now, some of the most popular, I'd say Golden Cross, Death Cross, End of the Road. A lot of people miss this one. This one will give you a warning sign. A lot of names came up on this one that collapsed afterwards. Walmart came up on it and collapsed. But essentially, this is just showing you, and you can see the charts here if we pulled up the charts. you can see sort of this end of the road pattern here. You can see all of these stocks dropping off, right? Because it's showing a downside gap. If we actually put the candlesticks, you'll see the gaps. So end of the road gap. And once a gap happened, it sort of continues to bleed. Eventually, it may close that gap, but it's saying that these are definitely the signs of bearish setup. And in many cases, when a stock gaps lower, it usually continues to sort of bleed out until it finds its bottom. And in most cases, you don't want to try to catch a falling knife, okay? Another great place to find stocks and trades. Using these theme lists. Short interest is another one, another great one. Short interest. This is going to tell you where stocks are heavily shorted. Let me pull some. TTM squeeze. This is actually a really good one. This will tell you whether stocks are triggered, which means the screen, the squeeze is triggered. So if we pull up the TTM squeeze, let's go March our templates, you can see that the squeeze is triggered on these. So anytime I scan through these, the squeeze is on, right? So this is where you can find stocks that are waiting to be squeezed into a particular direction. Okay, so once they fire, they can be a long squeeze, which means they're firing to the upside. So you can see here, if we put back on our, I'm going to make this my default. I don't think I can do that right here. Let's see. All right, so you can see here, this one has now fired and is starting to move up. Okay, so it was in the squeeze and now it is fired. What's another one? Oh, that was where's, hold on. Let's do the short squeeze. And when we pull up flip charts, we'll see the exact opposite here. So the squeeze was triggered. Oh, let's go to templates. Boom. Now we can see that these are firing to the lower end. Okay. So same thing here. It was triggered. Now it is now fired the squeeze and price, or at least the squeeze is saying that the momentum is moving lower. And so this is a great way to find these sort of setups based on TTM squeeze. And plenty of ideas in here when it comes to technical ideas, but also the screeners on the themed list are great as well. So if you like real estate, there's a list for you when it comes to stocks or ETFs, and then you can then screen these for whatever you're looking for. Same thing when it comes to cannabis, oil, gold, fintech, EVs, all of these. You can look at stocks as well as ETFs that cover these sectors and also get some of the news that's following these different assets. Okay. So plenty of ways. There's no reason to essentially be waiting on somebody to tell you where to look. There's plenty of lists here from AI to quantum. We have a quantum list as well. And this will give you the stocks as well as the ETFs. Okay. And like I said, too, let's say you want to look at an ETF that's in quantum, right? Instead of waiting for somebody to tell you about what stocks are moving in quantum, we'll go over the constituents for the ETF that tracks the industry, right? And then we can see what stocks are in here. Okay. And so you can kind of do your own research on different ones. You've got the IonQs, you've got the Rigettis, you've got the D-Waves, you got the quantum computing, you got the Honeywell, IBM. We have a lot of names in these types of ETFs. So these are just great ways to track industries when you're looking at the constituents as well as related ETFs. Because even if, let's say we were to look at a stock like, let's look at a quantum specific. Like if we were to look at IonQ and we came over here to related ETFs, this would be a great way to find other quantum ETFs that are holding stocks that we may be interested in. So instead of necessarily having exposure directly to a quantum company, you can find ETFs that track the whole industry. right? So you can sort of have this diversified exposure versus direct exposure. But in the case that you do, and maybe you want to trade leveraged ETFs, you can also find those here, or looking at the largest assets under management, or just, like I said, the percentage of holding, which one holds the most of the particular stock you're interested in. Okay, so these are great ways to track sectors and dive deeper just starting here on the investing tab. Okay, so hopefully that answers a lot of your questions. If you have any questions, drop them in the comments. I'm always here to help. We also make tons of videos here. So if you ever come to the site, there's plenty of them here. There's also what? There's also archive webinars here. Okay. So plenty of ways to find trades. You just got to know where to look, and plenty of ways to learn how to find these trades here as well. Okay.